Okay, now we are live. Yes, okay. I hope you can see everything. I would love to see all your feedback in the chat window. This would be amazing because then you can give me the feedback if all these technical issues work, if the stream works, and so on. I'll just check here on my phone if we have a good connection. Oh, yes. Lila Pferd is already there. Hey, Philip. Yes, thank you very much. Nice to see you again, back from the live stream on the German channel today in the morning. Now here we are on the English channel on Albertarium. So we'll see what we can do for today's analysis. Hello, everybody. It's Ferzan. It's Ferzan. Hey, nice, Ferzan. So it's I think our number 4 with you together, right? We had 2 hours already swing trading according COT data, and now we are taking a deep dive into volume analysis and order blocks, smart money concepts. So this is what it is all about. Welcome, everybody. So who else is there in the chat window? Is there anybody else? Yes, 3 hours. Okay, so the main purpose of today's live stream is to answer all your questions about order blocks, smart money concepts, and of course our new volume indicator, what we published with Albertarium. So this is a very great, amazing puzzle which was missing in my trading algorithm. I really love this indicator because it gives more understanding about the markets, about where the markets are going, about the big players in the markets. I think it's also more valuable than COT data because COT data has some delay, and here we can see the real aggression in the markets, right? This is one of the great things. I see that we have 3 visitors. So yes, who else is there? Just write hello in the chat window. That would be awesome. Good. So let's deep dive into today's topic, and this is S&P 500 analysis. What are we going to do in the S&P 500? And we'll cover, of course, the current market situation with an in-depth analysis on different timeframes. And then, of course, we'll also cover some trading setups, what you can do, what you can trade. Well, some are already over the bigger time frame swing tradings because we talk about swing trading and day trading setups here with this volume indicator and of course also with the order block indicator. Yes, so let's do it, and we can see, I'll just delete this. Yes, we can see S&P 500 here on a daily chart. So this is a daily chart, 1 day. Each candle is 1 day, and this is the bigger picture. Where does the market go? Well, it goes to the upside, of course, especially since Trump election, which was here. We created a very nice demand order block right after the election because big market participants were already taking long positions here. They are positioning themselves right before the election. Well, if you see these kind of things and if you know these kind of insights, then you know that the big market participants, they know they have some information up front and then they react on it. Okay, so of course we are in an overall uptrend in the S&P 500, also in all the other US equity markets. Only the Nasdaq is a little bit lagging. Dow Jones just made new all-time highs today, right? The Dow Jones, let's take a look. Yes, Dow Jones, new all-time highs today. So this is the strongest market out of the indices, but for now we are focusing on the S&P 500. So let's take a look at today's, we'll zoom in a little bit more, and what we can see on the daily chart. Well, we can see the overall picture, we can see market structure, we can see the most relevant order blocks on the daily chart. And on the volume indicator, we can also see some things, but of course, if we want to see the latest positions of the big market participants who are pushing this move, this current move, what we are in, then we need to zoom in to smaller time frames. This is very important. So the hour chart, well, we see that we have buying here, but everything is red. RP, hi Philip, only 3. Yes, only 3 hours, I think. Okay, today it's a lot of webinars. Okay, let's zoom in to the 1 hour chart because, it's always about the time frames. If we look at time frame charts, of course, you can also look at tick charts or whatever. But it makes sense to look at the daily chart, the 1 hour chart, and then the 15-minute chart. On these 3 time frames, I look for my swing trading setups. Okay, these 3 time frames are relevant from my point of view, and we cover this in the first place. And of course, then if you go to day trading, scalping, well, then you can look at the 5 minutes and the 1 minute chart as well. Okay, good. So here we see the 1 hour chart for the S&P 500, and this was the Trump election day, and we can see this nice push to the upside, created an extreme order block, which was not reached. We just reached the smart money traps, smart money concept order blocks. And very important, we also now can see the volume indicator because we had here 3.5, nearly 4 days of buying, right? Buying, huge buying, and the big market participants, they were really aggressive pushing this move, and they were aggressive in, here, right? In nearly all of these move, they were aggressive. I don't draw all of this out. It doesn't make any sense. And then what happened? Well, because this move was too fast, they need a pullback to reposition, to load up more long positions. And this is exactly what happened in this push to the downside. Actually, I did not expect this huge selling here. But luckily, right? Luckily, there was just this huge selling, and all this selling was, I would say, neglected or erased with this nice move 1.5 days later. Because at this nice move here, we made lower lows. But where was the selling? Nothing, right? No selling at all on the volume indicator, no aggression, no aggressive market participants. Well, maybe you will think, what is he showing us? What is it all about? So let me explain this volume indicator. And generally, it shows the aggression of the big market participants. So we have the 0 line in the middle, and then it shows the aggressive market orders. Here in TradingView, we don't have very precise, accurate data because TradingView only relies on tick data. It doesn't rely on time and sales data, for example, like Sierra charts. There, the volume analysis is even more precise, but also here with tick data, for our purposes, it's good enough to see the levels of the big market participants on this tick time frame. And we see, of course, the colorful, the bright colors. This is what we are looking for. We have blue and red here with very aggressive market participants, and then orange and yellow with less aggressive market participants buying. So positive is buying and negative is, of course, selling. Red, aggressive selling, light blue, less aggressive selling, and then white and black, nearly no aggressive selling anymore. This selling is sometimes also very high in volume, but not taking part by the big market participants. White and black is mostly smaller traders, smaller orders, and not that aggressive anymore. So what we can see here with this fake out, right? There was nothing, just one little black bar, and then the selling stopped and all the buyers came in, pushing this market to the upside. And after this nice fake out, everything was clear that all this selling here was over and the big market participants are ready to move the market. Of course, they did not move in one go. It took them 2, 3, 4 days, and now they are continuing to push this price to the upside, right? That's how it goes. That's how it always goes. The big market participants, they have one big problem. They are too big to move around their positions in one day. They need to get liquidity from us, the smaller traders. That's why they do this fake outs. And that's why usually these kind of things happen with some spikes in one or the other direction without any volume. So where does this volume indicator get its data? Actually, this is a very good question. I think it gets the data from the stock exchange, but I'm not 100% sure. We need to ask Alberterium back office team. Maybe there's somebody here from the back office team in the chat, and you can answer this question: where does the volume indicator get the data? Is there any source available what you can point out and name this answer this question? Good. So let's continue with the analysis. And of course, now the question is, well, the swing is moving, right? So for swing traders, you missed the entry. I'm sorry, entry would be somewhere here, at latest, I mean there or there, whatever. These levels, these are the levels for swing traders. Of course, you can also have better entries. Of course, once you saw this, you could also get an entry here, right? Entry there, multiple entry levels where you can get into the swing. Of course, now it's running for those who are on the trade. I am in this trade with an S&P 500 contract. And the question is when to get out, right? When is the move over? When to get out? From my point of view, knowing the US indices, if we want to stay healthy in this market, we need to make higher highs. We need to break this structure, BOS, break of structure here to the upside. So at least we need to make new all-time highs. The Dow Jones already made it today. And very important, also this week, we have a very short trading week because on Thursday it's Thanksgiving in the US. So Thursday is going to be a holiday without any trading. Friday is a short trading day with less trading, very, very little volume. So what happens in these weeks? Usually the trend will stay the same. The big market participants, they just run their algorithms and they drive this market in their direction. So, but when to get out, right? When to get out? And this is a very good question. And I cannot answer this by levels, right? It can go even higher. I mean, of course, you can do some projections, you can do some Fibonacci, you can do some levels, you can draw some lines in the air, but actually this is just guessing. Nobody knows if these levels were really hit or not. So I want to give you like a step-by-step guide when it's really time to get out. And when it's really time to get out, we just analyze the previous highs, and we see and we find some algorithm how to spot these kind of reversals, how to spot these kind of situations. It's exactly the same as we saw in the bottom building process. We have exactly the same in the top building process. And if we see these kind of things, well, then it's time to get out, right? like the big market participants. So actually here we don't see this really good and bright because the time frame is too small for this to spot these moves. So let's zoom in and detect these kind of things here at this higher high. So let's zoom into the 15-minute chart. Okay, where are we? Let's see. There we are. Okay, make this indicator a little smaller again. Let's check this. Okay. So here we see these, what is this, 6 days, and Trump election was here. They drove this price to the upside. 1-2 days, heavy buying, right? Heavy buying, and then usually what happens in these buying processes, right? We get this buying in the previous highs. So highs, we have this buying here. What happened here in this high? Nothing. Where was the buying? We had selling. Not aggressive, right? Not aggressive selling, but this was a first sign that this all-time high, it was an all-time high, 6,050. It was not covered by heavy buying like before. Of course, this is not really the time to go out, like to exit very quick. You don't need to exit very quick. Of course, if you analyze the smaller time frames and you see these kind of things, well, yes, we can anticipate that this might be the high, and we might get better opportunities to get in. But then, for the swing traders who are active on the daily chart, you see this at the end of the day, and you say, oh, okay, this might not be a high, this might be the high. But then 1 day later, we saw this selling here. We hit the extreme order block here. We had we undercut the extreme order block, historical extreme here with heavy selling, right? First time heavy selling. So this was the time where the big market participants, some of them took their profits here. And so from this point of time, you know, okay, we have market participants who are selling this market at these price levels. Okay, if I'm in the long position on a swing trade and I want to stay in, and this market should go to the upside, we should reach new all-time highs, right? We should reach them. And then these sellers might get out, they are trapped, and then we should see more buying here with new all-time highs. But actually at the next day we missed it. We closed lower, there was no aggressive buying, nothing here. So at this time, at the end of this day, actually it was the third day in a row with some more signs that this market is in a top building process. So actually here it was time to get out. It was time to get out and to prepare for the next swing to the downside. Well, you don't need to trade the swing to the downside. It's against the overall trend, but at least to take profits and to get ready for the next trend to the upside. And then it came. So actually you can take the same process here and project it to the current situation. Okay, we also have today, we have some selling. So what needs to happen, but actually this selling was just a gap fill, right? We opened higher, we gapped higher in the S&P, then we made new highs of the day, and of course then we filled the gap. Very good. It's a healthy move. It's a very healthy move. But of course now we need to have new all-time highs tomorrow. We need to continue to the upside, and then everything is good and solid. So it might be the first sign of a top building process, but if we reach new highs tomorrow, everything is good. So very important, all this advice here, what I do, or all these things, is not an advice. It's just my personal opinion. It's just, it's It's just my experience, what I'm sharing here, personal opinion, no investment advice, nothing very important to know, because we have now 5 people watching, and yes, very, very important. Do your trading on your own risk. I also do it on my own risk. Everybody should take care of their own risk. Good. So this is actually when to take profits. So we are in this upward move, and we're waiting for the highs, new all-time highs in the S&P 500 as well. Also Nasdaq, from my point of view, should make all-time highs, and then all the markets are in a healthy environment, and we can take profits when we see some top building processes, and then take some new long opportunities within the next correction. But what about the shorter term time frame trading, right? We are here on the 50-minute chart, and actually shorter time frame trading also works pretty good, especially if we have order blocks, if we have the volume. And from my point of view, I also like to take the VWAP and standard deviation for my day trading, for the levels, to have some kind of rhythm, to have some kind of feeling for the market. This is very nice. And yes, but more indicators is not more success in trading. So taking this historical order block into account, everything is healthy and valid. We got some selling here, but selling stopped, right? We can see some divergences. Let's draw some lines. Well, it's just one. It's just one. So the highest volume in selling was in this previous bar low, 50 minutes, but the actual low was in this bar low with less selling. So this might be the bottom of this move. We had the gap fill, and now we should continue higher. So this was a good grab, could be a good grab with trading this market in long direction. You can trade on the 50-minute chart, you can go on lower time frames on the 5-minute chart. I don't want to deep dive into entry patterns and into entry strategies and so on. But of course, if you were to place your exit below this previous low, below this order block. Maybe if you want to play safe, below this previous level, right? This was a low, also relevant according market structure. We see this here with these circles. Depending on your risk and money management, I really like to put my stop a little further away, because then I trade with less size. Okay, don't trade too aggressive, because the markets sometimes are a crazy horse, and you get fake outs with if you have your stop too close. That's why I prefer either being a swing trader on daily basis, or being very fast in my trading execution, like kind of a scalper, just sitting there for 1 hour, maybe 1.5, and trading the scalping moves. Okay. So this was some opportunity. We saw also that the order block indicator made some good moves here. Decisional order block yesterday was taken, and this was also a good buying opportunity. This previous order blocks here, well, closely hit, right? Very close. We missed it, but also if you could spot these kind of things, good buying opportunities. Generally, also for day traders, I would say trade the overall context, right? Trade the overall context. The overall context is long. Don't trade against this rhythm. The rhythm is to the upside. So I think these are the most profitable trading setups. So great. Data comes from the cloud. Okay. So where, what about, so do you have any questions? Do you have some other markets we like to look at with this volume indicator? Okay. So then I would maybe it's a little bit delayed, right? Then let's take a look at some other markets. And I think a lot of people, I'm not this type of person. A lot of people are looking at Bitcoin. Actually, I had also a very interesting discussion with the Albatherium team about Bitcoin. I'm a futures trader, so I look at the future markets. But for Bitcoin, it makes sense also to look at the spot market, because the spot market has more volume than the future market. So also this is very important to understand which market should you analyze. From my point of view, I am only looking at the future markets. So actually, I don't know how to enter the spot market for Bitcoin. So let's do the analysis here for Bitcoin in the future market. And I think you can also understand it. You can see the things how this volume indicator works. Taking a look on the daily chart, let's start with the daily chart, because we see this really nice bull run here to the upside. Let's wait. And we see heavy buying here, heavy buying there, heavy buying there, right? And very good. If we see this heavy buying here, it was an all-time high. We need to break out with more heavy buying, right? So these guys who were positioning there in the first new all-time high are back there. They are driving this price to the upside, so this bull run is not yet over. So yes, this is the picture on the bigger time frame. We have demand here at the bottom. We have a huge gap to fill. Maybe I'm sure we will fill this gap somewhen. The question is when. When do we fill this gap? Because the move to the upside is really heavy, really strong. Bitcoin made it to 100,000 US dollars. Just hitting this level very close, 100,185. And yeah, the move to the upside is really solid for now, right? We are getting in some kind of area where we might see a top building process. So I would not consider shorting this move, because I'm not a fan of trading against the trend. I would consider taking new buying opportunities. Where are the buying opportunities? At the extreme order blocks, smart money traps. There we see the first levels of buying opportunities. And of course, now when the price goes there, we have a tool to confirm if these levels are gonna be bought or not, because we see these levels and we can confirm this with the volume indicator. For now, we see profit taking, selling, right? Selling here. Now it's getting a little bit aggressive. Okay. Profit taking from the big market participants. Let's zoom into the 50-minute chart. We see the same thing. On the 15-minute chart, we already went below this historical extreme order block, decisional order block. Now we are at this level, okay, and we see selling. what do we need to know? When is the good buying opportunity? When this selling is taken out by a new trend. Okay, then it's time to buy, or to not to buy, not immediately to buy. Usually it goes like this. We see some fake. Bitcoin is a master of fake, right? The master of fake. I would say the master of fake is Bitcoin. Is so illiquid still compared to the indices that it's very easy for big market participants to fade the extremes, to get more liquidity. So actually, I think we will get this kind of move, right? And then the question is, how does the volume behave here? Is it like this? Is it like this? Or is it even like this? And the further this dip is, further to the downside, and we have less volume, the more it is a good buying opportunity, right? In the order blocks, somewhere with some entry and exit strategy, put your stop below this really extreme, then you are very safe, and then trade the next move to the upside on swing trading basis. On day trading basis, of course, you need to analyze the smaller time frames, have some more aggressive risk and money management, and so on. Very, very important. Can you also elaborate? I look at the questions now. Can you also elaborate on the other indicators? There seem to be multiple indicators. Somehow I can't make much sense of the others. I feel like I'm missing the instructions. Yes, okay, that's a good feedback. That's a good feedback. We will prepare something, maybe some videos and so on. Currently, I'm also not prepared with all the other indicators. I'm just using these two. They perfectly fit to my mindset and to my process. But we can have a next session where we talk about the other indicators. In the package, you've purchased several indicators. Do you also only use these two? Yes, I have all these indicators in here, right? Everything is there, but I only use these two for now. I think more indicators doesn't fit to my mindset. I only use these two, but of course we can have a session where we discuss the others and the differences. So, what exactly is meant by smart money trap? So SMT. SMT means smart money trap. Extreme OB means extreme order block. And then DEC OB means decisional order block. So these kind of things are based on the smart money concept. And we also have inducements, right? Inducements here is also something which is relevant. Is also something which is relevant. The small labels IDM. And well, let's cover it from the decisional order blocks are order blocks where probably a decision is gonna take place. If we undercut a decisional order block, then there might be some decision, or you need to ask yourself the question, is this trend still valid or not, right? So here we touch the decisional order block. So is this trend still valid or not? And usually if this trend is valid, it is a good buying opportunity. It was a good buying opportunity here. It was a good buying opportunity there. Here we just went below, right? Also with selling on the volume indicator. Then we came back, but actually now we are getting to this decision-making process whether this trend is still valid or not, right? We touched the historical order block, and you can see this historical decisional order block, historical extreme order block. They always will show up in the past. So also always these order blocks, well, generally ask yourself, what is an order block? An order block always appears when we have certain price action after a reversal, right? Usually we have big candles, big fat candles, and then we have order blocks before these big fat candles, right? And these big fat candles are the impulse moves created by the big market participants who were positioning themselves in the order block, right? They were positioning themselves in the order block and then they move. So the idea about this smart money concept is that these order blocks, these levels, are again relevant for the future price movements. And actually, I think most important are the order blocks, which we can also confirm with the volume indicator. So was there really heavy buying or selling in these areas or not? Usually we see, if we have strong movements, we see a confirmation with strong buying, right? So here, this order block, after this order block, we had aggressive buying, pushing this move to the upside. So from my point of view, this order block is more stronger than this decisional order block here, because afterwards we didn't have that strong buying. So here, more market participants were pushing the price to the upside than the other ones. The same with smart money trap. Smart money trap is like, I would say, also a decisional order, or also an order block in the move, within the trend, just a smaller correction. So most likely not that relevant in terms of strength, but it makes always sense to confirm these kind of levels with volumes. Okay, I think we are mostly done. Only if you have more questions, then of course order blocks are identical with absorption from footprint. I think these are two different things, order blocks and absorption from the footprint, because the order blocks here are just created by price action. And absorption on a footprint, I mean, the footprint chart is taking the big market participants into account, like analyzing the volume. And here, these order blocks, they are just created by price action. So you need to link, and this is what I said, you need to link these two things together, order block and volume. You need to see these two together to have more confirmation and more knowledge about these things. We don't have footprint absorption here. It's just order blocks on price action. Good. Okay. So I think that's it for today's session. 40 minutes live stream, the two markets, S&P 500 and Bitcoin. Yeah, Bitcoin made new all-time highs. The bull run is valid and stable. It's very, very valid. We are just pulling back a little. Maybe we see a gap fill. I don't think we see a gap fill in this move. I don't think the Bitcoin will go down in this move to this level of 77,000 again. We will see this gap fill maybe later in 1, 2, 3, 4 years, whenever Bitcoin rally is over. For now, we need to wait and see wait for the bottom building process. We see this with volume divergences in the volume indicator, also taking the order blocks into account. And for example, once we are ready with this bottom building process with some nice fake outs without any volume, without any selling, then it's time to buy the Bitcoin again to the upside. Same what happens in every underlying, no matter if it's the S&P 500. We talked about the S&P 500, no matter if it's the Forex, same concept applies on all the markets, it's all valid. The most important thing, what you need to do is analyze the markets where we have the volume. So analyze the future markets, don't look at any CFDs. What you're trading is doesn't matter. You can trade and execute on your MetaTrader 5, on your MetaTrader 4, on whatever prop firm you're trading. The most important thing is analyze the future market, because there we have the real data, there we have the real market participants, and they are moving the market. Good. Alice, thank you for your feedback. Great session. Please do more similar sessions. Yes, everybody who is still here, I would like to see 5 thumbs up in this for this live channel, for this live stream. And of course, if you have more questions, feel free to ask the questions under the video. Okay, if you see the live stream, ask all your questions under this video, and then we can prepare the answers and do another live stream in the future. Okay, thank you very much for tuning in. Have a great evening. Always watch your risk and money management, because this is the most important thing in trading, I would say. And of course, analyze and take a look at the big market participants, because they are that big. They are moving the market. They can move the market. And if we spot them right, then we have a great edge for a successful trading setup. Thanks for tuning in. See you in the next session. And I wish